As a professional price action trader, there are things that you must understand in the market. The first important thing is to understand the structure of the market. Without the structure, you are going nowhere. Without the structure, there is no way you'll be able to make money, because structure will help you to understand the actual direction of the market. I'm going to show you guys minor swing level and the major swing level. These swing levels will help you to understand structure very well, and at the end of this video, your trading will never be the same. You're going to see a lot of improvement, because I'm going to show you exclusive secrets in this video. How to recognize a swing major level. We have our swing level around this one here, swing higher low. Then we have another swing level here. We have another major swing level, another major swing level, another major swing level here, then another major swing level around this zone here. Now let's name the structure. This zone is going to be swing major higher low. Let me increase the font a little bit. Swing major higher low, and then swing major higher high, then swing major higher low, swing major higher high, then swing major higher low, and then swing major higher high. These are the swing levels. And one thing you must understand is that before you can conclude that the major swing levels are no longer valid anymore, it is when one of the higher lows, right, is being intersected or is being invalidated by the sellers, because this is a clear bullish market, right? If current price action right now sells down, right, with this bearish structure, minor bearish structure, to close below this swing major higher low, then you can conclude that this major uptrend market is no longer valid anymore. We are now back to bearish market. The fact that the price action is still within the range of this swing major higher low and the swing major higher high is a confirmation that this trend is still valid. The buyers are still the one in charge of the market. Where is now the minor swing level, right? These are the internal structures, right? Higher high, higher low. Can you see this minor structure, right? Those are the minor swing levels, right? Because you can only find minor swing levels inside major swing levels. You have to understand the differences between the major swing level and the minor swing level. Can you see it now? So these are the minor swing level inside the major swing level. We have lower high, lower low, then higher high, higher low, higher high. Let me change the color to blue. Let me change the color to blue so that we can differentiate between the major swing level and the minor swing level. So you have to understand these things very well. This is a bearish example of how to understand the swing major levels and the minor levels in the market. If you look at the structure right now, overall trend is what? Is downtrend. If you look at the chart right now, you can see that the price action or the current trend is still downtrend, a valid downtrend. Why is it a valid downtrend? Because the swing major levels are still active, right? We have swing major levels around this zone here, swing major level here. We have swing major level around this zone here. Then we have another swing major levels here. we have another swing major levels there. Inside these swing levels, there are minor levels as well. We have lower low, lower high. Let me use this. We have high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Then we have higher high, higher low, higher high, higher low, higher high, higher low, higher high. Then lower low, lower high, lower low, lower high, lower low, lower high, equal low. Then we have higher high, higher low, higher high. You can see the internal levels inside the major swing levels, right? That is why this current trend is still valid. That reminds me, guys, please don't forget to click on the like button and subscribe and turn on the notification button so that YouTube can recommend these particular videos to other traders as well. Let's dive into the next session where I will be showing you guys how to trade this market structure by using swing levels and the minor levels in the market. Looking at the chart right now on Euro Australian dollar, right? The price action is bearish. Why is it bearish? Because the swing major levels are still protected. We have the swing major levels around the zone here. Then we have the swing major levels around the zone here as well. So we're having high, right? Then lower low, lower high, then lower low. You have to establish the recent key level zone that the price action invalidated during this downtrend market. So where is the recent key level zone? We have a key level zone here. Then we have key level zone around this place. We have this zone here, right? Because price action reacted multiple times around this zone here. Some times ago, there is high tendency that if price action retests this zone here, price will react and give us a sell opportunity to the downside. That is why we are recognizing this zone as a valid zone where price has reacted multiple times in the past. So as a professional technical analyst, you have to use historical data to establish your future or your current decision in the market. So we are executing our trade inside this key level zone. And one thing, we must ensure that the price action did not invalidate this last swing major lower high. On the 30-minute time frame where we are executing this trade right now, we have to exercise a lot of patience for price to retest or mitigate our sell zone. One thing you have to understand about forex market is patience. Without patience, you can never make money in the market. You know, market is structured in a way to take money from the impatient trader and give it to the patient trader in the market, right? So you can't come to the market and start looking for random trades. No. If you want to be a profitable trader, you have to acquire patience skill whereby you are coming to the market to look for opportunities. You are not coming to the market to start pressing buy or sell in the market. You know, patient traders can wait for days, for weeks for that A+ setup before they execute. It's not the number of trades you are taking, it's the number of quality trades you are executing in the market. You can see the internal structure on the 30-minute time frame is still bullish, right? Whereby we have low, higher high, higher low, higher high, higher low, higher high, higher low, then higher high, equal lows. We are expecting price to continue this short-term uptrend on 30-minute time frame inside this our point of interest so that we can look for a change of structure here and execute to the downside. Finally, price just mitigate our point of interest right now. We want the price action to invalidate this last higher low, this internal structure to the downside so that we can execute our sell position. So let's play the candlestick. Right now, price action failed to invalidate this minor key level zone. So we can't execute this trade right now until price action invalidates the minor key level zone. So let's keep on playing the candlesticks. You have to exercise a lot of patience in the market. Finally, the price action invalidates this key level zone to the downside. Let's execute by using our short position tool. We place our stop loss above here, then we target the swing level zone in the market. So let's continue. Price action is approaching our point of exit right now. Let's see what is going to happen at the end of the day. Finally, price smashed our take profit level. If you are blessed in one way or the other through this video, please click on the like, subscribe, and turn on the notification button. And if you want to be part of our free signal on Telegram channel, you can click the link below this video description, where you get access to our weekly profitable signals every week.